Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for the community to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
We must have a couple new people visiting from yesterday's IBKR webinar, because I see we had people on the Zoom, and I shared the Zoom yesterday.
Okay.
So anyone who's new, a double welcome. Thanks for coming by and joining us. If you do want to ask a question and you're on the Zoom, there's a feature on there to click on raise your hand. Just raise your hand and we can bring you on to talk live, which is an interesting feature. So we can really walk you through any questions you have. Is that correct, D?
Yep. And you could also, if you go to the YouTube, we're live on YouTube. There's a live chat there. You want to put a question in the live chat, type it in. Will's watching it. He'll read it back to me. And what I'm going to do, let me share my screen quickly. What we'll do is take a look at the pre-market report today to see what's moving in a pre-market hours. While we're waiting for questions to come in, I'm going to review some of the features that I get questions over the emails or through the chat. I might also show you guys some upcoming features. You don't have them available right now, but I might just start the discussion to set up what these features are intended to show, what type of insights we can get into the markets. And it has to do with volume, trader cohorts, and different participants in the marketplace. So I'm going to, if I have time, I'll start showing that to you guys now, but these features will not be available to you. You know, it's kind of a teaser. I don't like to do that a lot, but I want to kind of open up that discussion. Maybe we have questions on it. So those are the things. Pre-market movers, we'll take any questions and we'll talk about upcoming features. Sound good, Will?
Awesome.
So these right now, we're on a pre-market report, and these are stocks that are trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. See, 38 stocks made our percentage gainers list, 21 on the percentage decliners. So right now, from that perspective, looks like a slightly more bullish bias at the open. Let's take this list and filter it out to S&P 500 companies, and we'll take a look at what's going on there. To do that, I'm going to use the filters above. This filter in ETF, I'm going to drop it down, and by selecting one of these ETFs, the list below will get filtered by the holdings in that ETF. The top one, SPY, that's S&P 500 ETF. So let's select that. And now this list got filtered by the holdings in SPY, which are S&P 500 constituents. And I see here 6 made our percentage gainers list, 1 on the decliners. So it's not a huge list, but it is slightly more bullish at the open. I think the only ones that sticks out to me, I see Pepsi. I think they reported earnings. They're doing well, and they're able to pass along those inflationary prices to their customers. So from that perspective, they're doing pretty well. If you don't see any questions coming in, Will, maybe I'll start with talking about the new features if people are interested in that.
Perfect.
Yeah. Okay. So to set this up, let me see. So keep in mind, you guys don't have these available right now, but to set this up, let me talk about the different players that are involved in the markets. And some of these different players trade and enter their orders distinctly based on, the trader cohort. So, we have people who are trading just like retail traders, entering their orders from whatever, Interactive Brokers, E-Trade, Charles Schwab. We have mutual funds. They're institutions. They're handling, they stick to some kind of an index, and they create and redeem units. So they'll trade in a different way. Hedge funds, high frequency traders, and all of them kind of leave somewhat of a footprint. I'm going to come here to this closing auction. And there are a couple big liquidity events that happen throughout the day. One of them will be the opening auction. One of them will be the closing auction. And I'll talk about the closing auction really quickly. The closing auction is when a specialist or a market center that lists the stock. So it could be New York Stock Exchange. They have their own listings. NASDAQ has their own listings. And they queue up market on close orders, right? So buy orders on the close, sell orders on the close. Sometimes they'll have more buyers, sometimes they'll have more sellers, and they try to balance it out. And then the specialist will participate or add liquidity to it, or some liquidity providers on the exchange will add liquidity to it if it's needed. So who are these players that have to trade on the close, right? So first, let's talk about that. A retail trader, if you log in to your E-Trade account, Interactive Brokers, you could trade any time of day. That means you don't need to wait to end of day to buy Apple stock. And really, why should you? That makes no sense. If you think it's a good price at noon, you could buy it at noon. High frequency traders, they'll trade all throughout the day because they have a strategy. They could short stop, they could get long, they could hedge against positions. So they're trading continuously throughout the day. A lot of times they're reacting even to news or maybe a fundamental event or non-fundamental event, but they'll trade throughout the day. However, a mutual fund acts different, right? A mutual fund, what does it do? It collects orders throughout the day, and there are people who want to buy mutual funds. Then there are people who want to redeem and sell them, and they always trade based on end of day net asset value. Some ETFs also, if it's an ETF that gets created or redeemed, it's based on end of day net asset value. So the closing price is important because that's how everybody gets the same price at the end of the day, buyers and sellers. That's how they determine it. So if you enter in an order for a mutual fund today, you're not going to get filled until the end of the day when they reference the closing price, and that's how they determine their NAV. So those closing auctions are accumulation of orders throughout the day that are coming into these institutions, and they need to trade at the closing price. Okay, so they cannot trade 10 minutes before. They cannot create their units 10 minutes before. They cannot create their units a half hour before. They have to all do it at that closing auction price. They need the closing price. And that's a huge liquidity event at the end of the day. And it gives us a clue of what's going on in a certain trader cohort, let's call it, right? Those are, now, look, there could be some people who want to get the closing price. There may be somebody with an E-Trade account, you have the ability to trade on the close. There could be some hedge funds but for the most part, that's why these order types were even created, because there's a specific need, for that closing auction, right? There's a specific need for closing price in a closing auction and being able to participate on that closing auction. So now that we said that, we could take a look at the total volume on the closing auction, and that gives us a sense of if there's just more fills, right? More volume coming in from that side of the industry. So this is yesterday's, October 11th. These are all the stocks. Okay, and I'll talk about uptick and downtick. These are all the stocks that we have. There were 3,475 that closed on an uptick, 3,226 that closed on a downtick. I'll get into that in a little bit. That's how many stocks. What about in dollar value? Right. So in dollar value, there's total. I'm sorry, this is volume. What about in volume? This is stock volume. 423.5 million shares on an uptick, closed up on an uptick, 217 on a downtick. And in dollar value, $21.8 billion worth of stock closed on an uptick, 10.1 billion on a downtick. Okay. And I'm going to filter these out now. These are all of them. So let's just look at S&P 500 stocks. So that filtered the list below. And this is what happened yesterday. About 12 billion closed on an uptick, 6.5 billion on a downtick. And you could compare that, to the previous days. So these are rolling 5 days. And today, obviously, we have to wait till the end of the day to get the new numbers. Let me come back to October 11th. Now, when we talk about the close, we have a volume, right? So the volume is easy because that's reported on the tape and the price is reported on the tape. So we know exactly how much volume there was on the closing print, and we know the exact price. What we don't know is were there on balance, more buy orders coming in or more sell orders coming in. So we don't really know that, because at the end of the day, it's all matched up, buyers and sellers. But through the price action, we could interpret what may have happened at the end of the day. And one way to do that is to look at, did the volume.
Hey, D.
Yep.
So I'm just confirming this is a new feature and has not been released yet, or did you just release
Has not. So you will not see
All right.
this, right? I'm just explaining it to you so people understand when we release it. And I'll go over it again, but it needs to be an explanation, the significance of it. Okay. What are you looking at? What are the insights that we're getting? Right. And so the next step is, if we know the volume and we know the price. So here we'll take a look at I'll take a look at here. Here's NLSN. There's 13.9 million shares that traded on the closing price, right? And that's $387 million worth. So you see, look, here's Apple, $698 million worth closed. I traded on the closing price, but for Apple, that's not unusual. You could see on a relative basis, that's 0.6 on a ratio 0.6 of its average daily closing volume. And LSN, that's much higher. So do we think there are more, buyers or sellers coming in from these institutions. And one way to look at it is that if there are more buyers, then the specialist has to find that liquidity. And he could participate in the liquidity. That means if there are more buyers and there are not enough sellers at that closing price, if he can't match it off with other institutions or other people who want to participate, he'll have to provide that liquidity. So he'll have to sell some out of his inventory. If there are more sellers, right, at the end of the day, there's an auction. And if there are more sellers and he can't quite match everything up, you know, the order book can't match up, he'll have to provide that liquidity, extra liquidity, and buy some to put into his inventory, right? Now, specialists cannot, when you're providing liquidity by the rules, you cannot buy on an uptick, right? Because you're providing liquidity. You cannot sell on a downtick. So that's why we're looking for a clue. If it closed on a downtick, that means that most likely the specialist was also providing liquidity on the buy side, right? That's what they do. If it closes on an uptick, then the specialist was probably adding liquidity to the sell side, right? Because that's what he does. Stock ticks up, he adds liquidity. Ticks down, he's adding liquidity to the buy side. And we measure that really by looking at the very last minute of trading right before the close. And we take that VWAP and we compare that 1 minute right before the close VWAP to where it closed. Did it tick up or down? Okay, so here's an example here. Apple, it closed right at the same. So there was no tick. It neither went up or down. It just closed right there. So it's hard to say. You know, it could have just matched off. But here, like, so for Bank of America, ticked up right at the end. So this is where it was trading, 29.74, ticked up 3 cents. So the idea is that it closed on an uptick. So our assumption is that the specialist would have had to, if he's participating, would have had to add liquidity to the sell side. So there are probably more buying imbalance than selling, right? So that's the uptick, downtick. Does that make sense? More buyers ticks up, more sellers ticks down. All right. And that is taking the view of what may be happening, right? What may be happening throughout the day as people are entering in orders in a specific type of product. You know, so it could be a mutual fund, right? It could be new units being created or redeemed in ETFs. So ETFs, the market maker is trading the ETF throughout the day, hedging against that portfolio. But if there might be a need to create new units, right? Or there might be a need to redeem them because of a lot of outflows. That happens at the end of the day, right? They have to go to the issuer and either create or redeem them. So they send that, and those units will be created or redeemed. And that's one type of trader cohort that's participating in the market, and we're looking for footprints and clues of what may be happening there to paint us an overall picture of what's going on in the market, right? Because we're trying to break down all that volume into who's doing what. Does that make sense so far to everybody? So we could even look at on a relative basis, you know, here, NLSN, that was a big one yesterday. So a lot of stock traded right at the end of the day. But looks like they were able to offset because I don't see a big change from that last minute VWAP. Win traded on a downtick here. So 62.9 million shares, and that volume is 3.5 times It's average daily closing volume. Remember, we're talking about only the closing auction at this point. FedEx, 2.8 times its average daily volume, about 167.9 million shares. Sorry, $167.9 million worth of shares at the end of the day that closed on an uptick. So overall, we see, 12 billion versus 6.5 billion. And just looking at these, averages here, that's one of the highest I see so far, from the buy side. We see on October 7th, a big 19.5 billion on the downtick. But so far, that was the biggest one in the last since October 6th on an uptick. Are people okay? Any questions coming in, Will?
No, everything's good, dude.
Okay. Let me look at one more report if there are no questions on this one. And why is this? Hold on. Okay, I can't get to it. Let's do the opening auction one. So this is from yesterday. We didn't open yet, but the open auction is.
Oh, we did have a question from Rob, actually. He's
Okay.
asking, is the closing auction only the final trade? Does it last more than a second?
It's one trade. That's it. Right. So it's not continuous like you on your regular hours. It's all happens, all the orders get queued up.
It's literally the closing print, right?
The closing print, right. So those orders are getting queued up throughout the day. Those orders could have been entered in at 10 o'clock, 11 o'clock, 12 o'clock. I think the rule is after 3:50, you can't cancel them anymore. But all those orders are being entered, but they're all executed at one time. All right. So it doesn't go on like for a minute or two. It doesn't trade, at different prices for a minute. It's all one price, one print. You're either in on it or you're not. And again, the mutual funds that have to create or redeem, their NAVs based on those prices will have to be on that print. So they're pretty much, have to be like market orders at the end of the day. Okay, so yep. So that's the closing auction. It's a big liquidity event because you could see, I just showed you guys, what was it, like $20 billion worth of stock all traded at the close, right? $20 billion worth, not volume, $20 billion worth of stock, something like that, trades at one time at the close. And that was just the S&P 500. How many? Here, let me just take a look. Yeah, so over, 31 billion yesterday in total traded at the close across all stocks, right? That's everything. But S&P 500, you can see it was a big part of it. About, what is that? Almost 18.5 billion, right? 19 billion, 18.5 billion. Let's take a look at the opening auction. Now, the opening auction is a little bit different because a mutual fund, nobody really has to trade at the open, except there are certain times that there is a forced, and that's hard to tell, from here, but there is a forced sale or forced purchase. But it would be very hard to tell just from day to day. So a forced sale could be because somebody's not meeting their margin call, right? And that could trigger a forced sale. If the market's opening lower and you borrowed money or whatever, your hedge is not working, it's possible that you have to get liquidated. By regulation, you don't have enough, right? You don't have enough in there to meet your margin call, and you're just going to get sold out. So sometimes that will happen in the morning. Another time is that if you have a short, by regulation, if you have a short position in the stock, you have to locate that stock, meaning you have to borrow it from somebody. You can't just short a stock without borrowing it first. And if you don't have that borrow, your clearing firm, your broker will force you to buy back. And sometimes that could happen at the open. But that's might be a small portion of the opening auction. But the opening auction does work in a similar way, where that if people want to get in on the opening price, then they would send it to the specialist, to the market center that has the official open. They have an opening auction, open it at one price, and then the markets, and then all of a sudden you see that market center creating market making quotes. Now we do see pre-market trading. A lot of people can trade in a pre-market. Nobody really needs that opening price as a reference point. But there's certain players that cannot trade pre-market, right? So if you're a mutual fund, for example, you can't trade in the pre-market. And the mutual funds, by the way, they have two ways that they're trading. They do trade to create and redeem units, but they also manage positions intraday, which is usually done through VWAPs and so forth. But it's important to understand that the difference. The opening auctions could though be a signal, because that is the first time that people can enter in and trade on a certain order. So if you don't have access to pre-market trading, if you're a mutual fund, you have some restrictions. Not everybody could trade in the outside hours. So it kind of gives us an indication at the open, the first trade that certain participants can participate, and then obviously everything opens up for trading. And this is just to give us an indication of how yesterday at the open, when we say down or up, we compare that to the previous day's close. So in all the stocks here, there's 5,646 stocks that opened lower than the previous day, 2,091 higher, with volume 19.7 million shares higher, 54.7 million shares lower. Dollars worth, $656 million worth of stock opened yesterday, up at the morning, gapped up $2.6 billion. The stocks were lower than the previous day, right? So it gives you an indication of how people right at the offset, how they, offloaded stock or entered in stock. So let's take a look at the SPY. Actually, I'm right up at 9:30. I'll probably continue this, but wanted to start introducing different liquidity events that are happening throughout the day and what kind of insights we could gauge from them.
Perfect.
Right? So we'll start out with those two, and then we'll look at liquidity events happening intraday as well.
Mike's asking, what's the time range for the open?
So there is no timer in opening. A lot of times they'll open right at 9:30, but sometimes if the specialist either has a big imbalance or not enough, they could open up at 10 o'clock, 11 o'clock. So there are liquid stocks that have no orders. They won't even open because you need to trade something, right? So there might not be an opening price. Usually, though, the liquid stocks, those auctions, those limit orders, those market orders are getting queued up, from 7 a.m. or whenever they allow them. And by 9:30, the specialist already has they have the price that they're going to open it at and the volume. So a lot of times you'll see it, right around 9:30. But remember, that opening price is one event. It's based on an auction that is being queued up. Orders are being queued up in the morning. That happens, and then the market's open. Okay.
All right, perfect.
All right. So everyone, thank you for joining. Stay safe out there. Have a great trading day.
Yeah, that was the opening bell. Awesome, D. Great job.
Thanks, everyone.
We did have, just so you know, for tomorrow, we did have a couple questions about trying to hide out in these volatile times in dividend stocks. Maybe we can talk about, there are obviously some risks to dividends with rates rising and everything else as well. Maybe we can talk about that as well.
Okay.
Awesome job, D. Thanks, buddy.
All right. Thanks, everyone. Stay safe out there. Hope to see you guys tomorrow.